It's just not about domestic capital coming from Indian nationals. The movement can become bigger and bigger if institutional sports can come in. We have the IVC leadership here present today. When we interact, people say that investing in a startup is a risk capital. Whereas when we interact with insurance companies and pension funds globally, they find it one of the safest assets to build an alpha for their savers. Even a taxi driver in Canada, his capital is invested in Indian ecosystem. Why do they do so? They, over a period of time, have understood as that this is an asset class which is not risk capital, it's growth capital. And that's the growth capital message that we've been taking consistently for last 10 years as an industry to every possible organization. What I'm happy to announce, insurance companies are investing in this particular space consistently now, and even NPS, PFRDA, you have a choice. When you're doing your saving, you can do an active choice to invest in alternate assets out there. Ministry of Labor, it's been a tough challenge of convincing. We've been meeting, and last week we were with EPFO to just narrate to them the opportunities out here. I'll be happy if some of those would have joined us today here, and maybe they are here. While that is happening, there was a challenge that we were seeing. Is the Indian entrepreneur also staying in India? Or are they looking forward to go out of India? Last week, there was an international investor who was talking to us, and they said, we don't want to talk to you guys. I said, what happened? No, we don't want to invest. I said, tell me the reason. So you have a super rich tax of 37%. Says, okay. And we know entrepreneurs make money only once in a lifetime in the entrepreneur. All through the 10 years, 7 years of building the business, they make nominal kitchen expenses. The day they do the capital sale, they make an exit, there used to be a 37% capital gains surcharge on that particular income. I actually smiled. The reason I smiled is that, there was a conference, the roundtable meeting with the Prime Minister. We presented our point of view that this particular tax should be reduced to what listed companies' taxes paid, which is 15%. And look at the machinery, the way it worked. Within few weeks, that super rich tax was reduced from 37% to 15% for the capital gains that are going to be made by you in unlisted stocks or by our entrepreneurs. So kudos to that government that is listening, that is adapting to all that is happening out here. And now, that investor is talking to us. And talking to us despite what we keep seeing, funding winter. Is it here? Yes, it is very much here. Does that bother us? No, not at all. Although, whatever has happened yesterday is not the replica of tomorrow, but there are perspectives that I would like to share. Perspective from the ecosystem point of view, the investor point of view, the founder point of view. What is happening in this particular stuff? Entire ecosystem today talks about free cash flow, fundamentals. There is nobody nowadays talking about unit economics. There was the unit economics hai, dhande mein paisa hai. No way. Till that time you make cash flow profit, nobody is looking at that. As investors, we got reasonable valuations. Last year, if we were looking at 18 months ago, if we were looking at a company which was growing 3x in revenue, the person was saying, yeah, I'm growing 200% year on year, divided by 2, my multiple of revenue should be 100 times. Multiple of not profit, but of revenue should be 100 times. And how do they justify? See, in 3 years, I'll grow from whatever 1x to 3x to 9x, and hence my multiple of revenue would be only 10 times by then, and hence it's a justified revenue multiple. This is the rate I'm growing. Thankfully, those days are behind, and we are getting reasonable valuations to invest in. From a founder's perspective, if you have to become a shining star, only the struggle can bring the best out of you. आग में तप करके ही सोना कुंदन सोना बनता है. So that's the kind of thing that the founders are going through. They're excelling in this particular time. The only thing that they have to ensure that they survive through it. They survive through this particular time. There was a time when we launched the fund 2. This was 2017 January, within 3 weeks of demonetization. During that particular fund, GST happened. And then, at the time of lockdown in March of 2020, we believe we were lucky. Lucky that only 20% of the fund 2 was invested. And we just opened our door to invest through India's fast-track funding program called SOAR. Result, the returns from that particular point in time of investing are disproportionately better between what we saw in Fund 1 to Fund 2. Today, there are lots of learning from SOAR, which we can replicate in this current times to run and bring a SOAR 2 with the kind of funding that is coming in from us. You know, we used to go to an investor, they say, why would I invest in YourNest? Why won't I invest in Bloom? Why won't I invest in somebody else? It was a difficult question for us. We all industry came together, went to the regulator. Can you mandate that every fund gives their performance numbers every 6 months at a standard, in a standard manner? CRISIL, our S&P global company, they came forward to do that particular study as a first one, and they started doing this study from April of 2013. So the moment any fund has come in after April of 2013, this particular benchmarking report comes in. This is the latest report that came in January 2023. There is a sad phase out here of infancy, where the returns for the funds from FY 14 and 15 were lower than 12%. This is CAT fund, only VCs. Okay, VCs are part of category 2, as well as real estate funds are there, as well as debt funds are there in the second category out here. But look at the pure venture capitalist. What magic has happened since 2016? The returns are upwards of 35%. Pooled average revenue return of entire industry for those many funds that are being mentioned out here, 95 minus, let's say 14, around 81 funds are delivering returns above 35% consistently. Is that something must be happening on the ground? Business leaders who manage P&L are guiding. There are thousands of successful business entrepreneurs today who are guiding other entrepreneurs. Hundreds of unicorns who are being looked up to and being reached out to. You reach out to an entrepreneur, a startup entrepreneur gets the time and advice from them. Even a failed entrepreneur is multiple times better to give an advice in the ecosystem today. So there is enough mentoring, there is enough things that are happening, and that's the result that is happening since 2016 onwards. Hopefully, we'll be able to sustain, contain, and its aspiration can be 15 times return to the investors. What value creation has happened or valuation jump that has happened with your money? Fund 1 investors. We invested 76 crores of 83 crores. That money helped us, our companies, till the time we were holding that company, to raise 800 crores from other investors. Till the time we exited those businesses, the value of those companies was 2,800 crores. That's the multiplier effect that happens. Fund 2, 184 crores invested so far. External people who have put in money alongside us is 1,052 crores, and the portfolio value is 5,060 crores. Sometimes people ask me, what is the 10 lakh of rupees worth to you? For us, it is immense for a startup. Immense means I know that even a small check of 10 lakhs enables the founder to get the wings to be able to do better. Fund 3, early days, but even in the early days, 117 crores invested so far. Alongside us, external investment of 750 crores has come in those companies. Overall, this is the value created. 378 crore invested, and $1 billion of market capitalization created in the last 11 years with this particular team at YourNest with your support. We keep referring to Schumpeter all the time. He's been the economist of the 19th century. His statements are true even today. If you have to create value, you need to energize the wild spirit of the entrepreneur, and you have to break through innovation the ways of doing things. We live it every day. This is what we look at. This is the stories that we listen to. And this is the revolution that we would like each one of you to be part of.